here's Silver Institute, and you can see a 251 million ounce deficit last year. Now they're forecasting a smaller deficit this year, a deficit nonetheless, although I would imagine it's going to be bigger. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a special episode of the show, because today we're going to dig into some of these claims that you hear thrown out there: silver shortage, this or that, paper, blah, blah, blah. What's really going on? And fortunately, let's dig right in, because when you start, we will be focusing on First Majestic and this guy, Keith Neumeyer, who runs this silver company, who could conceivably be talking his book. I mean, who knows? Who knows? Maybe he doesn't really think silver is going to go up, but we did have some news, because here, could the silver price really hit $130 per ounce? As we scroll down here, silver price has made significant gains, rising above just $20 per ounce, which seemingly would be quite far away from $130 per ounce. Although that would really only be a fraction of the move that we've seen in Tesla stock since the Fed swap lines 2 years ago. We'll leave that aside, though, and see why is it that well-known figure Keith Neumeyer, CEO of First Majestic Silver, has frequently said he believes the white metal could climb even higher, reaching into the triple digits. We have a quote here from Keith. Silver is the only commodity that is not reaching its historic highs, and it has reached those highs on two separate occasions back in 1980 and 2011. I think we're going to see that high breached in the cycle, and when it does, it's going to wake up the market. Once it breaks through the $50 level, I think that it's going to get up to the $100 level pretty quickly. Now let's dig into this. Is this guy just coming out of his flying saucer with these claims? $100 silver. I mean, although I would point out, in Keith's defense, it's possible maybe he read some of these books about silver that describe the sequence of events that the COMEX, the CFTC, and others took in 1980. We'll leave 2011 aside for now. Basically designed to make sure that the silver price came lower, which makes you wonder whether could silver have actually hit $100 back in 1980 had those quite drastic and fraudulent steps not been taken. So that's fair of consideration, I would say. So say Keith 1, William Banker 0, at least on my scorecard that I'm keeping here. Neumeyer has voiced this opinion often, putting up a $130 price target in November of 2017 with Palisades Radio. My man Tom over there, we might add, had Ron Paul on his show recently. Pretty cool. Thank you, Tom. Keith said this again in March of 2018 with Kitco, and another in 2020. At times, he's been even more bold, suggesting the white metal could reach even $1,000 per little nugget. Wow, I guess my 5-ounce cube would be looking pretty shiny then. Although, let's stay focused here, because $1,000 per ounce. Now, if it's 25, let's do a little math here. That would be quite an impressive return. So I'm going to say it's going to be 4 times 10. That would be a 400 bagger, I believe. But we'll double check the math, make sure I've still got it. So 1,000 divided by, let's call it $25 right now. So that would indeed, oh my goodness. What am I thinking? I'm not even close. So if you have 40 times 25 gives you 1,000. So if silver were a 40 bagger from here in these hyperinflationary times, you get a $1,000 silver price. Now, obviously, that's complete lunacy, as anyone who has a Wall Street or Keynesian economic degree would attest to. Yet, when you think about that, Bitcoin was $100 in 2013, and if it's 32,000 or whatever it is today, we make it a 300 bagger in just the last 8 years alone, whereas silver is half of its 1980 high of $50, which I'd put my 2 ounces that I could justify a case. It was going well higher than 50 back then. what if we even had a 320 bagger from the 1980 price? So let's say that silver, which I would assert anyone who actually understands anything the Federal Reserve is actually doing, they turn to silver first, even more so than gold. So in terms of what people actually buy, not how it's priced in paper, what if silver got a Bitcoin-like return? Okay, Bitcoin got 320x from 2013 to 2021 over the last 8 years. So, I mean, that was only a fraction of the entire move. So let's say that we took the $50 in 1980 times 320x over the last, it's like 41 years. That would give us a $16,000 silver price. Might add at Silverfest, we're going to have a segment, and you can submit your own calculations where, I mean, if we theoretically know the gold price, because if the dollar was just designed as a measure of gold, and you can build your assumptions of how much gold the US actually has that is not leased out or rehypothecated, and how many dollars that are out there. But then if you took an 8-to-1, 16-to-1, or whatever you feel the gold to silver ratio would likely be, the numbers quickly get quite big. So now here it's interesting. If you look at the chart of Tesla stock, here it is in 2019, floating around $40 at the time. Now this is adjusted, but $40. And if it's up at 549, that means Tesla, just in the last 2 years, coincidentally, since the Fed started those swap lines in September, is a 13.7 bagger. So I'm just saying, it's just looking at comps like they do on Wall Street. So why $130? He believes the current market, it's only a matter of time before it corrects. It could be possible that he thinks there's going to be some blowback from the unintended consequences of this.
Give credit to the for utilizing its authority and some of the tools it has within the margin space to control the sort of the price, the volatility of the silver contracts.
So, I mean, it's possible. I know Keith does have a financial background in addition to being a great company builder. So he could be thinking about the natural free market consequences of when you try to control a price and the volatility of the price, no less, like acting Commissioner Benham asserted there. It could also be one of these silly things like Keith is looking at the Fed's balance sheet here. It was around 900 billion prior to the Lehman crisis, and all that transitory talk back then turned out to be pretty permanent and has gone exponential. I don't know if that's one of the things that Keith was thinking about. Or maybe Keith read the LBMA's recent report where after the silver squeeze weekend, fears emerged in London as to whether there was enough silver should the demand continue at that pace, because it was only a matter of weeks before London's existing stock was used up. That could possibly have been an influence. I do expect to have Keith on the show. Great reason to hit the subscribe button and the notification bell, and we can dig more into some of these audacious claims. Now here it's interesting. He talks about some of the numbers are made up. I wouldn't trust them at all, which is fair enough, and I certainly would agree, but at least the numbers that were presented, here's Silver Institute, and you can see a 251 million ounce deficit last year. Now they're forecasting a smaller deficit this year, a deficit nonetheless, although I would imagine it's going to be bigger than last year. And that really points out how for the last 10 years, yes, you had an imbalance, but this was able to be kept in check. And what Keith, I believe, is getting to is that, okay, when the investment demand is low enough, if there's 1 billion ounces mined, 700 or so goes into industrial. And if the investment's less than 300, you're good to go. Now, in recent years, as you can see here, that's gone into a deficit. Plus, as we will dig into in a moment, there's a growing chorus of people amongst the world who are realizing these things. So I get it. I get it. Keith is running a company. I mean, we can leave aside the green demand and all that good stuff, or how, you're going to need silver if we continue to use computer and electronics or build Tesla cars. Because here, when Keith talks about a silver shortage, someone says, I call bull. If there was a shortage, these prices would not be happening. Well, again, I think when you factor in the price capping operation by the banks and the CFTC, as well as the things that they mentioned in their report about fears of running out of silver, and then even just looking at the numbers, or, you know, you could take the opinion of one of the guys who's running the company that is producing single largest silver focused producer. So there is that. And interesting, another story that we had here, Craig Hemke talking about the silver offtake. And while July did not end up being record setting, you can see an interesting trend here for total silver deliveries back in 2015 was 84. And then it started growing in 2017, been getting bigger, then up to 292 million ounces last year. And Craig thinks we're on pace for even slightly faster than 2020. Maybe that was slowed a little bit by the July contract, but you see bigger and bigger numbers, and with good reason. Especially, it was pretty exciting for me to see that Interactive Brokers is offering delivery of COMEX contracts. So I'm in the process of getting some of my silver off the exchange. And who knows, maybe we'll be able to set that up so you can participate in the near future too. I think a lot of people feeling that way, and then having some skepticism about what they hear from some of the confusing messages put out by the top investment banks of the Keynesian academies these days. I think that factors in, but perhaps I'll allow me to explain. Here's a report by JP Morgan's Center for Commodities back in Denver. Too bad I didn't stop by there, or maybe it's good that I didn't back in my time there. But if we make a long report summarized shortly, you can see that while the silver supply has been growing with technology, recent years it's actually been coming down. And you scroll all the way to the bottom of this behemoth that someone sent to me, and we get a conclusion here that going forward, we anticipate industry concentration levels to marginally increase in both silver and gold. The continuing mining challenges of lower processing grades and limited exploration success will force companies to look towards M&A to sustain production profile. Doesn't sound like things are ideal, so that could support what Keith is saying as well. But again, let's take a look. There's another factor, these Reddit silver apes keep hearing about. Now they're even getting a shout out on Reuters by Peter Hobson, who seems to generally cover silver for Reuters. Quite exciting. You see an article, now silver going mainstream, which I think is exciting. I'll probably tweet this one out later. Some of the 122,000 strong community that only popped up this past January. And there's a little bit of anger, like, oh, look at that language. We'll leave that aside. But bankers aren't getting through to this group. And as we scroll down here, there were some interesting comments, pictures of posts that are not favorable to JP Morgan. But here's this corner of the market talk that I'm not sure if that's what Rostin Benham of the CFTC is keeping a close eye and watch on. But I would say, like Tim Hack here, 23-year-old stacker in Germany, it scares me every day when this bomb will burst. Silver and gold really have intrinsic value that you can even feel when you hold in your hand. Now, perhaps Tim has some parents or grandparents who understand the devastation that the hyperinflation following World War I, which was what facilitated the rise of Hitler following that. Perhaps that's what he's referring to. And posters on Reddit, joined the fray January 27 when Wall Street bets were saying that if enough people bought metal, they could push prices to the moon. Now that would be pretty far. I don't know if that's more or less than $1,000 per ounce, but there was an argument put forward on Reddit that big banks trade huge quantities of paper contracts for silver that they don't have in their possession, keeping prices lower than they should be. Now, certainly that seems like another unusual claim, especially. But then there was this
resiliency and the market structure of the futures market really were able to tamp down what could have been a much worse situation in the silver market.
So, okay, that's a little unusual to expect the commissioner of the CFTC to talk about a price capping operation that could keep prices lower than they otherwise would have been. But I mean, is there really a short position? Or I thought that might be all gibberish until I looked at these adjustments to the SIVR prospectus on February 3rd that even acknowledged hedge funds and large banks with substantial short exposures to silver. Now, these are written by folks like JP Morgan and Goldman Sachs. At least they're authorized participants of the trust. So on some level, they're signing off, giving their blessing, and confirming the substantial short exposures to silver. Of course, you don't even have to dig through the weeds there. You could go to the CFTC's own COT report, where you see that 157,000 contracts open interest, and 30.8% of the position held short by just 4 or less traders, which comes out to about 235 million ounces, which sounds like a lot in today's hyperinflationary culture. So there is that. And of course, don't forget that even that whole issue about whether the metal was added, which I disputed, and it had several other silver experts saying there was no way the price could have fallen 10% on February 2nd, while the ETFs were setting records where they claimed to have added 118 million ounces. And then we find out, oops, they miscounted by 106 million ounces, and still have yet to explain anything about that. So when you're thinking about these silver apes, you could consider any of those data points, or just keep reading a little further where they say in some ways that's correct, because contracts representing about 800 million ounces of silver are active in the New York futures market alone. More than twice the amount on the exchange says is registered in their vaults. And as we've seen, much of the silver the banks say buy and sell in London, another big trading hub, is borrowed. Plus, you don't even know if they're getting their numbers right. So with all of that said, I wonder what will happen because even after JP Morgan paid 920 million to settle charges for hundreds of thousands of fake orders it sent to manipulate the prices, which certainly Bart Schulten confirmed when I had him on as well. I wonder what will happen with that deferred prosecution agreement when the CFTC finally gets around to that evidence that I sent them on February 12th that explained it clearly. But with that said, thanks again to First Majestic for being a leader. Keith Newmeyer, I think your projections make a lot of sense once the silliness is overwhelmed. So hit the subscribe button, hit the notification bell, and if you can't wait till then, there's some more First Majestic talk coming your way now.